Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Friday, September the 27th. The year's 2019. Let's talk trading. Time for the weekly wrap up. Okay, we only have one more trading day in this month, and that's Monday. But I want you to make sure you use your money and risk management on each and every trade. Let's make this month a stellar month where you had your money and risk management in place. Okay, we're taking a look at the week here, and we have 1, 2, 3, 4 pairs that didn't fill. Well, and right now, dollar yen is 122 pips above that weekly low. It's making a new weekly high, as you can see right now. And we're in the previous week's upper wick zone, which was most of the previous week's candle here. But maybe we'll take a look at some of these other pairs and see how far they missed that gap. As you can see, we opened just below the close of the previous week, and the Euro AUD just went south. And I would imagine the Euro NZD probably looks the same. And you can see here, it tried to fill the gap, just went south. Pound New Zealand probably looks pretty much the same. Let's take a look. Oh, it got closer, but here we go again. It's now in the lower weekly wick zone. And the final one was New Zealand USD. But you can see some of these pairs had a pretty good run. Okay, and this one, it's the opposite. It gapped up, tried to close, missed it by about 6 pips. Had a nice run up, and it's back to the weekly midpoint. Now let's put things back to dollar yen. Get to only 148 pips now off of that yearly open. Month we're up 211 pips past that open, and 46 for the week. And you look at the daily now. Once again, boys and girls, fellow traders, remember, these videos are for educational purposes only. Your results may differ from mine. And remember, Forex trading, as all trading, is very risky. So, if you need advice, seek it from a accredited financial professional rather than somebody off a YouTube video or some internet forum. That way, when you lose your money, you know it was lost by a professional rather than listening to somebody else. So here we have one of our trades. We take that first day of the week. We put a horizontal line at the high and one at the low, or we use an indicator to do it. And then anytime price gets within those two lines for the rest of the week, we look to trade outside those lines. So Tuesday, there was a slight movement upward, a nice downward movement. Then come Wednesday, we got back in and we broke out, and then we closed right on the line. And then yesterday, we actually dipped down into the line, but then we came and through the weekly open, and we came back and went back up. And then today, we dipped down below the weekly open, shot back above it, outside, and you can see we made a new weekly high. So right here, trading this was profitable. But remember, your results may differ from mine. But it's a very simple trade, very simple. And for those traders who are looking to possibly swing trade, once again, just, you can just check back, see if price is going to cross that weekly open, and just trade that weekly open crossover. You could use the weekly buy zone. And you can see we're stopping here at the open of July right now. and we have made it above the August opening day range low, the June, and the July. And on the inside bar, for those traders, this is just the last time we had a daily inside bar. You can see here back on Wednesday, actually on Tuesday, we dipped back in. Wednesday we opened, just taking that simple trade. Right now, if you've been riding it the whole time, you're up 106 pips. So once again, we show the strength of this inside bar trade. I mean, somebody could counter say, yeah, well, you could just plop a horizontal line down anywhere. And you know what? You'd be right. I proved that over a decade ago in the 2% Club chat room. No, I'm not doing the chat room anymore. I've got too many other things to do. But who knows? Maybe life will change a bit. And then I'll have time. I can open up the chat room again. We can chat live. So I do these videos because I think it's the next best thing to chatting live rather than just posting charts, static charts, and then, typing out all that commentary. This is a lot. In fact, I have more fun doing it this way. Okay, for today, range, only 2 pairs over 100. Even though we have some really nice move on the yen, it's still only 52 pips. And you can see we exited the upper wick zone right now. You'd be good for 20 pips, which isn't a bad trade, not at all. And because price dipped down into the lower wick zone, that's almost a doji, but crossed above. If you took exiting the lower wick zone, you'd be up 41 pips if you're still riding that trade. And weekly H1 highest open, daily H1 highest open, weekly H1 lowest open. You can see where those opens are. Once again, using an indicator to show it, but you can do it by hand. It's just the indicators make life a lot easier, which we discussed this week. Okay, pivot point was inside the short zone, so there's no real bias. So we just take the trades as they appear. You can see the shorts paid off at the weekly open. If you go short, it crosses the weekly open, comes back to cross above. You just exit right there because the price is telling you something. It told you something a third time, told you something a fourth time right here. Then you see here a fifth time, it just took off. So, you can just, okay, why did it do that? You can see, you can just put your crosshairs here and you can see how it's just coming up through these wicks here, right here, coming up through those wicks, meaning buyers are pushing the price up. So as price is leaving the lower wick zones of these candles, that means price is pushing it up. And when it leaves the upper wick zone, and once again, price is getting pushed up. You're just reading the chart, nothing fancy at all. Rat zone, red rats, get ready if you want to make a trade before the end of today's session. And we took out the pivot as we showed earlier. Let's put this back to H4 so we can look and see what's happened throughout the whole week, even though we can see the past couple of days here. Taking out those pivots. And we almost hit weekly R1. And you can see we hit that weekly pivot. We did hit the weekly S1 down here and reversed for the people who like to do the pivot trades. Once again, taking out those pivot points. Now we've only missed one pivot for the month down here at 16.209. I think just the other day, didn't we have like something like 5 missed pivots? Price action, 2 ball at the bottom, green at the line. Price took off, 3 ball at the top, look for red at the line, which would be 108.10 at the moment. in and out of the wick zones. And you see, we look at this stuff every day. It's like some of you may go, you just keep repeating yourself. Well, that's what we want in trading. We want to repeat things that are profitable. you know, so if you get bored, it's like, well, you keep looking at the same. How come you're not flipping around? And I think I've explained that. I want to show you how if you stick with just one pair throughout the week, throughout the month, even just throughout the day rather than flip back and forth, you will have opportunities to take profit, make profit. As you can see, I just opened this trading profile and we haven't moved that much, maybe 3 pips to the downside. And you can see here, its price is moving slow. I think people are wrapping it up for the week. And on the Einstein line, you can see a short triggered just the last minute. Now, okay. Oh, I remember I wrote this new indicator, the higher high, lower close, lower low, higher close. And I've been watching it this week, and I think it might release it soon for you traders. It seems like you can definitely profit off of it. Sometimes though, it's a scalping trade. You can see here it triggered short, but price just took off. Here it triggered short only to return. And this is all in the upper rat zone here. You can see down here in the green rat zone. Oh, and if you wonder, I've got the M1, or that M candle indicator. So it's a 15-minute chart, but it's also showing the H1 candle in the background there. So basically, right here, you had a green candle, you had a trigger, and what's the rule of thumb, boys and girls? You don't trade against the H1 candle color. Here, as you can see, price is just taking out high after high, still has a couple of highs to take out here, otherwise it'll start taking out lows, and this indicator just shows you, it's the same, it's TROHL5 in case you're wondering. Okay, I just did something I didn't want to do. I hate it when that happens. And across the open, of course, everything's up. And something else we need to look at here is the range. Here's the weekly open. Here's the daily open. Today, you can see here, it's hit a couple of the ATRs, open plus half of the ATR4 and half of the ATR2. Which for the week, this was the, for the day, daily, this was the minimum, this was the maximum. In fact, I saw somebody else using ATR and they were having all these, I don't know, Fibonacci numbers, 23 and 68, and there's just no magic number. I mean, I just use half because midpoint seems to work very well. You go, okay, well, I'm halfway there. And you can see here, we're halfway through that zone right here. And this is the open plus the ATR, the weekly or daily ATR zone here. And there's the weekly. And let's see, we can scrunch the chart. That's too much scrunching. Come on. So you can see here 1, 2, 3, 4, 5 for the past days. We didn't get anywhere near. So we have 122 range on the week, 52 on the day. And showing here the that buy zone for the week. Once again, going across that weekly open can be profitable. So we've got one more trading day left in the month. So fellow traders, just remember, it's not what you trade, it's how you trade it. So go out there, come back next week, and let's continue the draining of the banks. Have a fun and safe weekend.